Have you ever wondered if you're paying more in taxes than you should? It's frustrating, right? You work hard, you follow the rules, but at the end of the year, it feels like the taxman is still taking more than his fair share. But what if I told you that there are hidden deductions and tax credits that most people miss? These could save you hundreds or even thousands of dollars, and it's time to uncover them. In this video, we're going to dive into the tax world and explore the deductions and credits that are often overlooked, even by seasoned taxpayers. Whether you're filing as an individual, a small business owner, or even self-employed, you might be leaving money on the table without realizing it. We'll break it all down for you step by step so you can start saving today. What are deductions and tax credits? Before we jump into the hidden deductions and tax credits, let's quickly refresh what they actually are. Understanding the difference between deductions and credits is key to maximizing your tax savings. Deductions reduce your taxable income. This means the lower your taxable income, the less you will owe. Think of deductions as a way to shrink the portion of your income that's subject to taxation. Tax credits, on the other hand, directly reduce your tax bill. They're like a coupon for your taxes, and depending on the type, they can be even more valuable than deductions. Now that we have that straight, let's dive into the deductions and credits you might be missing. Deductions. You might be overlooking charitable contributions. It's not just about cash donations. When it comes to charitable contributions, many people think they can only deduct cash donations. But that's not true. You can also deduct non-cash contributions. Have old clothes, furniture, or electronics sitting around? Don't just toss them out, donate them. The IRS allows you to deduct the fair market value of these items. It's not just physical goods either. Donations like stocks, bonds, and even real estate can be deductible if given to qualified charities. Make sure you keep a detailed record of the items you donate, along with the fair market value and the charity's name. Medical expenses, the deduction you might be missing. Most people assume that they can only deduct their medical expenses if they're seriously ill or hospitalized. However, that's not the case. If you had out-of-pocket medical expenses that exceed 7.5% of your adjusted gross income, you can deduct them. These expenses include things like doctor visits, prescriptions, surgeries, and even dental care. And if you've spent money on things like eye exams, hearing aids, or mental health services, those are deductible as well. Don't forget, this can be especially useful for families with high medical costs. Home office deduction. Working from home can save you money. Since the pandemic, many people have shifted to working from home. But did you know that if you use part of your home exclusively for work, you may be eligible for the home office deduction? This is one of the most underused tax breaks available, particularly for freelancers and small business owners. Even if you're just using a small portion of your home for business purposes, whether it's a dedicated office space or a nook where you handle administrative tasks, you might be able to deduct a percentage of your home expenses. This can include rent, utilities, and even repairs. The IRS offers two methods for calculating this. The simplified method, which gives you a set rate per square foot, or the regular method, which lets you deduct actual expenses based on the percentage of your home used for business. State and local taxes. Don't forget about these. Many people overlook the fact that they can deduct certain state and local taxes. You can deduct either your state and local income taxes or your state and local sales taxes, whichever gives you the bigger deduction. It's up to you to choose the method that benefits you the most. If you live in a state with high income taxes, for example, choosing the income tax deduction could save you more. On the other hand, if you live in a state with no income tax, the sales tax deduction might be more beneficial. Tax credits you might be missing. Earned income. Tax credit. The Earned Income Tax Credit, EITC, is one of the most powerful tax credits available to low to moderate income earners. If your income is below a certain level and you meet other requirements, you could qualify for this credit, which could reduce your tax liability or even result in a refund. The amount you can get depends on factors like your income, number of children, and filing status. It's estimated that a large percentage of people who qualify for this credit don't claim it, so it's definitely worth looking into if you haven't already. Child and Dependent Care Credit. Helping families save. If you have children or other dependents and pay for childcare or other care services, you might qualify for the Child and Dependent Care Credit. This credit helps offset the cost of care for children under the age of 13, or for other dependents who are physically or mentally incapable of self-care. The amount you can claim depends on your income and the number of dependents in your care, but it can provide significant savings. Be sure to keep records of all care expenses, including receipts for daycare, babysitters, and even summer camps. American Opportunity Tax Credit. Save on education costs. If you or your child is in college, the American Opportunity Tax Credit, AOTC, could save you up to $2,500 per year for the first 4 years of higher education. This credit applies to qualified education expenses, such as tuition, books, and supplies. Unlike some other education-related credits, the AOTC is partially refundable, which means you could get money back even if you don't owe any taxes. This is one credit that can make a big difference for students and their families, so don't miss out on it. Lifetime Learning Credit. More help for education expenses. The Lifetime Learning Credit, LLC, is another education-related tax credit, but it applies to a broader range of students and educational expenses. Unlike the AOTC, the LLC isn't limited to the first 4 years of higher education. It's available for graduate students, part-time students, and even courses related to career development or job skills. This credit can provide up to $2,000 per year, but it is non-refundable, meaning it will only reduce your tax liability. Even if you're not currently in school but are taking classes to improve your career, the LLC might apply. Other hidden deductions and credits you might be missing. Student loan interest deduction. Reducing the cost of education debt. If you're paying off student loans, the interest on those loans might be deductible, even if you don't itemize your deductions. The student loan interest deduction allows you to deduct up to $2,500 of interest paid on a qualified student loan. This deduction can be especially helpful for those just starting their careers and still paying off their student debt. Keep in mind that there are income limits for this deduction, so make sure to check if you qualify. Energy-efficient home improvements. Save on taxes and help the environment. Did you know you could save on taxes by making energy-efficient upgrades to your home? The IRS offers credits for things like installing solar panels, energy-efficient windows, or even a new HVAC system. These credits are designed to reduce the costs of making your home more eco-friendly while also providing tax savings. The Residential Energy-Efficient Property Credit, for example, can give you a percentage of the cost of solar energy systems and other renewable energy improvements. This is a win-win. You reduce your tax bill and make your home more energy efficient. There are so many tax deductions and credits out there, but the truth is that many people miss out on them. Whether it's overlooking small deductions for medical expenses or not claiming the Earned Income Tax Credit, it's easy to miss out on savings. As we've covered today, there are hidden deductions and credits that could save you a significant amount of money, and it's essential to be proactive about identifying them. Do your research, keep detailed records, and don't be afraid to ask for help if you need it. Remember, taxes don't have to be a burden. By claiming the deductions and credits you qualify for, you can keep more of your hard-earned money in your pocket. So, now that you know about these hidden tax savings, take action. Make sure you're claiming all the deductions and credits you're entitled to. If you found this video helpful, make sure to give it a thumbs up, subscribe to the channel for more tips, and leave a comment below with any questions you may have. Don't let those savings slip away. Take control of your taxes today.